Hey everyone, it's Jason Nichols over at Trust Financial Group, and today we're going to talk about self-employed mortgages. This is our bread and butter. So for a decade now, we have been dominating the market and helping the self-employed, entrepreneurs, and people with a high net worth that have very little income on their tax returns. So let's dive in. Uh, how do you apply for self-employed mortgage? It is very similar in the nature of a traditional mortgage, but the requirements are going to be a little bit different if you do not show a lot of income on your tax return, which most self-employed do not. So what's going to be different? Well, we're not going to ask you for your tax returns. Instead, we're going to dive into other documents that are more acceptable for the self-employed, whether it's bank statements, your profit and loss, or other assets. Who is considered self-employed? This is going to be a small business, freelancers, independent contractors, gig workers. This can even be owners of large corporations. So don't think it's just a small business. Even real estate investors can fit into this bucket as well. So the requirements. Here you're going to need a little bit better credit score than you would, say, if you're doing an FHA loan. So the minimum for most lenders is going to be 620 unless there is some really good explanation on why it's low. Typically, your 620 is your lowest. Cash flow. So what we need to show the bank, you don't have to, but it only opens up your opportunities for different loan products, better interest rates, is if we can show the consistent cash flow over a 2-year period. But don't worry, if you've only been self-employed for, say, 6 months, we still have options for you too. And then reserves. So whether it's a purchase or a refinance, we want to see reserves. So if it's a purchase, after you put your down payment down, we need to see additional funds in the account to cover, say, 3, 4, 5 months of mortgage payments if needed. And then your DTI. The DTI is called your debt to income ratio. And what we want to see is based on the cash flow we see minus deductions, what we want to see is a 43% DTI. And then on the down payment, keep in mind, you're probably going to need to be a little bit more than FHA. I would really plan on coming in with at least 5, probably 10%. We do have lenders that will go as little as 3%, but that has really got to have some really good supporting factors to complement that loan. Lastly, the documents. So like I said in the beginning, we're not going to ask for your tax returns, although if you can provide tax returns, and we might be able to get creative and have be able to explain to the underwriters why there's losses, things on your Schedule C or in other schedules that we could possibly bring back into your income to qualify. If we can do that, that's going to give you the best opportunity to get the best rate. So keep that in mind. But if you know that's not an option, typically what we'll need is a profit and loss statement. You can just grab that out of QuickBooks. Bank statements, we could go as little as 3 months bank statements, prefer 12, and 24 is even better. If we can go 24 months bank statements, all it does is help lower your interest rate. If you don't have the best bank statements, a lot of times what we can do is just get your 1099 for the last 2 years and use that as your income. And then, sometimes we might need to get supporting invoices from some of your bigger contracts. If maybe once, twice a year, there's a large deposit from one of your customers, we're going to need to explain where that deposit is coming from. And so having a customer invoice would help secure that and satisfy that question. Other mortgages that we offer. So outside of this, the traditional bank statement, profit and loss, self-employed loans, FHA might be an option. Portfolio loans, that's sort of going to fall back into your P&L bank statement lenders. But then we also have VA loans that work for self-employed. This is a fantastic way to go zero down if you're self-employed. And then again, the bank statement loan, that's most traditional for our self-employed. And then on the conventional side, sometimes this works. But frankly, we only see this work is if your Schedule C has minimal write-offs. Just to prove, well, maybe not prove, but to help ease you on our validity of helping the self-employed, here are just a few more reviews. I encourage you to dig more into us. I think there is more than enough evidence online to support that we are the go-to when it comes to helping the self-employed gig person get any kind of mortgage financing, whether it's a purchase or refinance. If you're self-employed and you need a mortgage, give us a call. It's 888-878-7715, and one of our loan officers will be glad to assist and get that loan done for you. Thank you.